Hey, all right. Good morning, everybody. Hump day. We're halfway home, halfway there. All right. I titled this one this morning Econ Extravaganza. Why? I don't know, man. I got to call it something. Economic calendar for today. You can see we have a lot of goodies. 8:30, 10, 10:30, 11:30, 1. Additional auctions today. When we have additional auctions, there are possibilities, endless possibilities, that we will see a lunch stall out and actually galvanize the market and kick us into gear. All right. I covered this a little bit yesterday in the new channel, right? We were talking about what trend days look like and how trend days end and how a market that is trending really well is likely to stop trending at lunch. And on those days where it doesn't, where it suddenly just explodes and starts running at 11:30, this is probably why that happened, right? So what happened in the overnight hours? We already know the economic agenda for today. We just went through it. So what happened overnight? A little bit of weakness. And I say just a little bit of weakness. You can see the trend that we've been running here. Right now, that yellow line is the 5-period daily moving average. And I had someone ask me the other day, what's that mean? It means I'm going out to a daily chart and I'm putting on a 5-period moving average. And once I have that 5-period moving average, if we look at the way the market reacts when it's above the 5, it's bullish. When it's below the 5, it's bearish. Then we answer the question, are we moving away from that 5 or are we moving towards that 5? Should I be bullish? Should I be bearish? Am I looking for weakness? Am I looking for strength? But I don't want to hang out on a daily chart. So rather than hanging out on a daily chart, I take that 5-period daily moving average and bring it into the intraday chart. That yellow line right there is a 5-period daily moving average. That blue line right there is the 10-period daily moving average. When we get too far away from the 10-period daily moving average, the market often pauses at that point, starts asking the question, have we gone too far? And see, what the market is looking for is mean reversion. When we go too far away, too fast, we'll outrun a moving average. This graph right here is showing how far away, in percentage language, how far away are we from that 10-period daily moving average. And you can see when we get around 2 to 2.25% away from that, we tend to turn around and come back. All right. Because we're asking the question, did we move too far, too fast? So when we start to chart that out a little bit, here is what we've been doing. You can see when we get too far away from the 10, we pause, we quit advancing, we let that 10 catch up, or we turn around and we come back towards the 10. The other line down here on the bottom is the 20. So we got the 5, the 10, and the 20, all from the daily. And we're trying to quantify what happened last night. Well, we finally took a nice push yesterday that was just a little too far away from the 10, from the 5. We got a little too far away, and now the market is pausing and it's pulling back. We broke some critical levels out here, right? We finally made it through and have that micro cup. And now we're getting a little bit of a Busby, a little bit of a pullback. It's what a market does generally when it breaks out of a range, when it breaks out of a resistance level, it tends to come back and validate that old resistance as a new support. Why I take the time to go through that this morning? Because I really want to make sure you guys aren't out there like trying to short everything, thinking this market's on its way down. This is just a breather day. The market's got to take a pause. It ran a long way, recovering up off of those lows. It's looking for a little bit of a rest. Also, we had European news. It wasn't hot. I mean, it wasn't that bad, right? We just kind of got a blah day at the moment. And one thing that you can recognize is that we're underneath the 50-period moving average. Now, the 50-period moving average on any time frame that you want to use is a critical level. When we're above it, we're bullish. When we're below it, we're bearish. And it's not just bullish and bearish, it's sentiment. Should we be looking for longs? Should we be looking for shorts? Are we above or below that 50? Well, we're below it, right? We're below the 50. We've even validated it. Now that we've broke through it, we came back up and bumped against the bottom of it. Markets do that often after it breaks a major level, right? So what do we have this morning? Globex high and Globex low in a relatively decent range. We need to add to that. What do we want to see? Show previous days. Yesterday's high. Yesterday's low. The close. Notice we're right there right now back at the close. And where did Globex stop earlier before it finally broke through? The low. Institutional pivot points. We've been flirting with the floor pivot. We've been flirting with the low and the close. And here we are yet again back at the close. Should the news start to become positive, the economic news that we have coming out today will make a break back towards the upsides. We got to get past that 50 through the floor pivot, the Globex high, which ties into these pivots back yonder, actually ties into yesterday's open. Now, I said that yesterday, and I'm going to continue to say it until it starts to sink in. Mark the RTH open. It will help you because when a market gets back to that open, a lot of times it's going to react. It's not something that I see very many people mark. And yet, when price gets to that level, it reacts very frequently. Should we make it past the open, we'll deal with yesterday's high and the expected move. Now, we almost hit the expected move yesterday. Now, think about that. That expected move is something we're supposed to hit in a week. We almost hit that thing in 2 days. That's how much juice we had. That's how fast we were moving away from that 10-period moving average. When we move too far away from that thing too fast, we tend to pause, consolidate, maybe even reverse a little bit and let that thing get caught up, right? Look how big of a gap there is between each one of these days. We were moving so fast that the 10 and the 5, like right here, had to make extraordinary moves, right? We don't want to see a moving average pointing straight up. They look crazy. So we got a little bit of angular overhead resistance to deal with this morning, right? If we were to snap our line, got our line in the sand there. Should we revisit that? We'll have to make it through there. Previous day's high, expected move high, and we could look at some percentages. You can see that 0.5% to the upside would put us very close to yesterday's high, and then the expected move, and then a 1% move. We're not asking too much to see a market make a 1% move. The average daily range for the last 21-day average is over 1%. The ES has been making 1% moves so often that is now its daily average run. So a 1% move is not out of line. However, we have been getting lower highs and lower lows, and we are doing this general downward trend. If the economic news doesn't spin us back around, we're likely to break Globex low, deal with that 5-period daily moving average, 0.5% to the downside, and then back to where we closed on Friday. It's entirely possible that we could make that move today. I don't really see it. It doesn't feel that bearish yet. I'd be expecting more of a range day than anything else, but we got to let it unfold. If we are dealing with a range day, we're already below. I guess we're back inside now. We were already below yesterday's lowest point, right? So we had an inside day breakout this morning. I would be looking for that to actually complete, right? There's the lowest point of yesterday. Keep a very, very close eye on that value. If we break back below it, then we'll be looking to revisit these levels, right? That'd be my line in the sand, because an inside day breakout is a completely different thing than just breaking through a pivot. If we do manage to break through that, then we'll look to stay range bound inside of yesterday's price action, right? And that would be the next box. There's not enough economic news out there to imply it's going to be a negative day, just not a bullish day. Plus, stocks and bonds and the dollar were all making very odd moves today. Very odd moves. Everything was. We'll get there. Just some very crazy stuff going on when we're looking at the dollar and looking at the bonds. And the Russell was doing a lot of leading this morning, which is very interesting. All right, so we're looking at the NASDAQ. It's got an average daily range right now of 1.5. I'm going to just round up a little bit. It means a normal average day in the market is a 1.5% move. That's pretty good. It's kind of significant, yeah? Well, right now we haven't done anything. We're basically flat, range bound. So we're going to be looking for a break to the upside. We'll start with the upside, then we'll look at the downside. A break to the upside would put us back through the 50, the floor pivot, Globex high, the weekly expected move, which the NASDAQ did get through yesterday, kind of peaked outside the box and then jumped back in again. 0.5% move and a 1% move. A 1% move would put us to the high of yesterday. I like it. If it continues to stay bearish, we'll look to break the Globex low. Yesterday's low, 0.5% move to the downside, and a 1. This is the 5-period daily moving average off of the daily chart. We'll look to get through that and get a 1% move. I don't expect a 1% move to the downside. 0.5%, yes. So that is our morning, right? That's what we're looking at. And every one of these can change at a moment's notice. The only good thing is we can see it coming. We know when the economic events are scheduled. Any one of these could make things better, could make them worse, could kill a trend, could start a trend. So if we're not trending, we could begin at 8:30, 10 o'clock, 10:30, 11:30. And it's very likely that we're going to be range bound all day. But that range could end at one of these time frames. Economic events on days like this just cause consternation. It's been a very odd morning. If we go back and we look at the chart, you can see the Russell was actually making these little pops before the rest of the market was. The market was behind the Russell, which is odd. We don't see that lately as often as we used to. For a little while this morning, stocks, bonds, and dollars were all moving up at the same time, which is odd. Don't even know how to deal with that, right? When that happens, we kind of just stand aside and say, I don't know. I don't know what the heck that means or what the heck we're supposed to do with it. Don't be afraid to say, I don't know, right? I don't know. I don't have an economics degree. I haven't been doing this for 40 years. I do know that we can easily look at something and quantify it. Is it at support or resistance? It's at resistance. Well, where's the stock market? Is it at support or resistance? It's at support. Oh, so when the dollar's going up, the ES is going down today. Yep. Okay, that's for today. Just as simple as that. Is dollar looking like the VIX right now? Well, it was earlier. Not so much now. So we have a range-bound VIX that is slightly bid up, right? It's slightly bid up. It's not that bad. We have the dollar in this wedge, in this range. We're still inside of yesterday's price action, which isn't a surprise because yesterday was a very large range. And we have the bonds broke out. They are well beyond the previous few days, right? It wasn't even just yesterday. It's days worth. Kind of put that into some perspective. That's a significant move. We're coming into an area of resistance. We'll be looking for the bonds to deal with that level and then this level. What is good to see is that we held that 57 area. That was a major concern right there. Right? Remember when bonds move up, interest rates go down? Banks don't like that. So the ES doesn't like that. So when we see the bonds going up, we anticipate or expect that the ES is going to go down. It's not necessarily what we're seeing today, but that's what we would be looking for. Keep your eye on the bonds today. Keep your eye on the dollar. Those economic events are very likely to impact the bonds just as much as they are likely to impact our own marketplace. You will see a forewarning, a heads up. Notice this strong move here in the market goes the opposite direction of this strong move in the market. So the bonds broke range and started running to the upside, and it took our market down. If we happen to break this wedge here and make another run to the upside, it is very likely to again drag our market down lower. Keep your eye on those bonds. Keep your eye on the dollar. Use the VIX to confirm. Trading View. It's a really good way to manage the morning when you're looking for things. Change pre-market percent. Use the filter. Try to hit it to 100 names or pretty close. Yeah, close enough. Change the color scale. Well, that's bright. All right. That's bifurcated. Google and Microsoft up more than 1%. Tesla up again more than 1.5%. So we got some names making significant moves. 3 FANG names up more than 1.25%. That's pretty bullish. We talked about this yesterday in class. How many names in the S&P 100 are up at least 0.5%? Less than 10. How many up are more than 1? 5. That's not feeling too bullish. It's the names, though, that get my attention. Large mega cap names can rock the marketplace. Of course, we will be looking at sectors as well. Swap this one to the NASDAQ 100. Set it to pre-market change percent. We don't need a filter. We'll add a little color. Again, very bifurcated. We've got some big names that are flat or red, And we've got some big names that are very, very positive this morning, like DocuSign. I know DocuSign kind of slips through the cracks, but that's a big name. NASDAQ 100 change percent. How many names are up in the pre-market? At least 0.5%, less than 10. The good thing is we don't have to count them. We can come over here and look. Now, the reason I like this screener, how many names are down this morning? We didn't really measure that, right? Well, NASDAQ 100. How many names are down more than 0.25%? 22 names are down more than 0.25%. Well, how many are positive 0.25%? 12. So it very bifurcated, right? It's evenly divided, it seems. How many names are down 1%? 6. China names. That stands out right off the bat, right? China names and chip names. Texas Instruments gets lumped into the chip sector. So chip name, and then NXPI, another chip name. So 3 chip names and then China names, all down more than 1% this morning. Wow. That really stands out, right? Kind of brings perspective into everything. NASDAQ 100, how many names are up at least 1% this morning? 5 names. Ketchup. Yes, I'm so glad I kept that stupid ketchup trade. It's going to be a while before I trade ketchup again. Tesla, Microsoft, ketchup, and Cadence Designs all up this morning. 2.25%. That's a pretty good size move. S&P. How many names in the S&P are down at least 1%? 4 names, and 2 of them are finance. One of them is energy. Energy and finance has been very tightly correlated this year. It makes sense that we're seeing a pairing here. I don't like to see finance down this morning. Actually had went long in Visa and was stopped out yesterday. I was going to run a naked call for earnings. Never even made it to the earnings. Just got stopped out on that thing. But considering that it looked like it had dumped, I'm glad I didn't keep it. How many names are down at least 0.5% this morning? Bank names, bank names, bank names, finance, energy, and finally one of those chip names that we were talking about, right? There's NVIDIA, Texas Instruments, right? You're starting to see the weakness here and where the weakness is resting. How many names are down at least 0.25% in the S&P? 17 names, including communications names like Disney and Netflix. Both streaming companies are down this morning. Google is down. When I see Google down, I immediately start looking for Facebook. Where's Facebook at? And if Facebook's down, where's Twitter? So bank, energy, bank. It's starting to get to be a theme, huh? Energy. So we got to find the sector that is going to carry us back in the other direction. Which sectors are positive this morning? Use the drop down, flip this over to sectors. Consumer spending, consumer staples. This is the household goods. This is the consumer that is more frivolous spending. Casinos, cruise lines, resort hotels, both consumer side is up. And then jets again, which has been a little bit of a fake out for a while now. Healthcare, tech, bio, and industrials. The rest are negative. So we're looking at energy and emerging markets. Both energies and emerging markets are down. Materials are down, finance is down, utilities are down, metals and mining are down. So we got to get this turned around if we're going to see that that really nice, clean continuation that we've been trading. We're not going to see that continuation if we can't get this turned around, right? But the good news is, with all the economic news on the agenda today, we very easily could get this turned all around. Right? That's totally a thing. Last one, just because I find it easier to go to TrendSpider to do this. The pot names are down. Crypto is down. And EV markets are down. All right, we don't really have an ETF equivalent that I like for any of those three. Now, I guess EV is a little bit bifurcated, right? Because we've got half the names red, half the name, or a third red, a third flat, and a third positive, including Ride, Tesla, XPEV, NIO, the same EVs that's been making moves, continuing to make moves. I mean, look at that, right? Man. I had stock in this and sold it. So we're getting that flag in Tesla. It is a red to green right now. One of the red to green rules that I like to keep is that we open higher than where we opened yesterday, and that the red day closed in the lower portion of that red day. Let's just go over to the big screen and look at Tesla from this perspective here. We don't need all that junk. Above yesterday's open, check. It's the line in the sand, right? That's where we want to be, higher than that. Now, looking at it on this 30-minute, it doesn't seem like we accomplished very much, but we start taking it down into the smaller time frame, and it starts to look a little bit better. So we're above yesterday's open. That's a good place to start. I would like to see it go a little bit more, but this is a catch-22. We want to see it up in the pre-market, but we don't want to see it too up in the pre-market, right? We don't want to try to trade it after it's already moved 4% in the Globex. So as we come into the open, we really want to see this thing kind of maintain this range right here, not really trying to gain much more than that, and really trying to keep it from fading too far below its Globex low. So not too big of a range to deal with. If we do manage to break through that, we'll of course be aiming back towards the 1100 again, dealing with yesterday's highest high and this institutional pivot point right here. Not too bad, right? You could even look at it as the 5-minute open range of yesterday. I think that's an adequate and a fair statement, right? If we get outside of yesterday's 5-minute open range, then our target is going to be yesterday's high and then fib levels beyond that, right? Or you could bring up like the floor pivot indicator and use, R1, R2, R3, blah, 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 right? There you go. It's looking pretty good. Tesla is so expensive, though, that I don't know. It may be worth your while to perhaps at Ride or Lee or NIO. Yeah. Sink or swim. What I got for you guys this morning, be careful, be safe. I will be streaming at the Bullish Bears starting at 9:15. See y'all there.